wartime. You feel alright when you hear the music ring. Well, now you step inside, but you don't see too many faces. Coming in out of the rain, they hear the jazz go down. Competition in other places, but the horns, they blowing that sound. Way on down south, way on down south, London town. Check out Guitar George, he knows all the chords. But it's strictly rhythm, he doesn't want to make it cry or sing. If any no guitar is all he can afford, when he gets up under the lights to play his thing. And Harry doesn't mind if he doesn't make the scene. He's got a daytime job, he's doing alright. He can play the honky tonk like anything, saving it up Friday night with the Sultans, with the Sultans of Swing. Young boys, they're fooling around in the corner, drunk and dressed in their best brown baggies in their platform soles. They don't give a damn about any trumpet playing band. It ain't what they call rock and roll. And the Sultans, yeah, the Sultans that play Creole. Creole. Microphone and says it lasts just as the time bell rings.
Hello everyone, I'm Larry, your instructor for financial accounting. I'm going to take a moment to show you very quickly how to create a trial balance, and this is going to be a part of your homework and project assignments in the course. First, we looked at a previous video that we had produced where we showed you a dozen transactions that had occurred for a company. We had this sequence of 12 different transactions, from starting up the company by investing some cash all the way through declaring and paying a cash dividend. And we had receivables, payables in there, cash coming in, cash going out. And looking at those 12 different transactions, we showed you how to record all of them to the journal. Here's a copy of the journal that we showed you with all of the debits and credits shown for all of those transactions recorded to the journal. Then from the journal, we showed you how the same transactions are posted to the ledger. And here are all of the T accounts: cash, equipment, common stock, accounts receivable, the expenses. And all of the T accounts in this ledger contain the same numbers, the same debits and credits as what are included in the journal. The only difference is this is a very nice pictorial version. At this point, let's say this is the end of the month, or it could be the end of a quarter, the end of the year, whatever the period is that we are closing out. Let's run a quick balance on these accounts. Now, if we look at the cash account, we see all of the debits that were made during the period. Those were situations where cash came in, went up, and all of the credits. Well, let's calculate the balance at the end of the period. I'll draw a line here. If we add up the numbers on the left side, the debit side, they add to 42,000. If we add all of the numbers on the right side, the credit side, they add to 11,950. What we will do is to net these two, meaning we will take the difference, we will subtract them. Since the left side is bigger than the right side, when we subtract, the difference turns out to be $30,050, and that balance is on the left side, where it's a larger number. Does everyone see that? 42,000 were in the left column, 11,950 in the right column. We took those two totals and then we subtracted. We took the difference, we netted them, and the number was larger on the left in the debit side. So our cash account at the end of this period has a balance of $30,050, and that is a debit balance, as it should be, because what we call the normal balance for cash should be on the left side, the debit side. Now let's look at a couple of other balances. Down here at the accounts receivable, we see we originally had a debit for $8,000 and then a credit for $5,000. So it looks like someone paid off part of their account there. What's the balance, the remaining balance? $3,000 on the debit side. It's got a $3,000 debit balance. Let's look at some other balances here. How about notes payable? On the credit side, we have a $23,000 balance. And how about service revenue? We had recorded $7,000 and another transaction with $8,000. Our total for this period, we have a $15,000 credit balance for service revenue. All of the rest of these accounts look pretty much already worked, except for accounts payable. It looks like we originally had $2,000 credited in payables, and we must have paid up $1,200 worth of that. There's a debit. So our balance in accounts payable is an $800 balance on the credit side, the right side. Once we have run all of the balances on all of our accounts, and remember, when the balance is done for each account, it's going to be either on the left side or the right side. Assets should have a debit balance. Liabilities should have a credit balance, assuming they're not zero. We'll have expenses with debits in them, dividends with debit, common stock with a credit. When we run all of these balances, we can then take the final balances and transfer them over to the trial balance. Now, this is not a financial statement that we're reporting to the world. This is merely an internal document that we are going to use to check against mistakes, to see if all of our debits and all of our credits added up. So what you see for this trial balance is we simply took all of the accounts, there's all of the account names we had listed on the left side here, and some of these had debit balances and others had credit balances. We listed those balances, being very careful whether they were a debit balance or a credit balance. Once we listed all of the debit and credit balances, we totaled these two columns at the bottom. Does everyone notice that the two totals add up to be exactly the same? That's a very good sign. It does not ensure that we did not make any mistakes. There could have been some transactions that we completely forgot to include. There might have been transactions where we switched or flipped the debits and credits. But at least what the trial balance is doing is showing us that by the column of the debits adding up to the column of the credits, that's a good initial check so that we can determine, well, there aren't any mistakes there at least. At least the debits match the credits, and then we can move on in the process of the accounting cycle. I hope that helps. And again, you're going to need to produce a trial balance for your homework and your course project. And good luck in your studying.
Yo, you wanna be an accountant? Think it over, it ain't easy, you might need a four-leaf clover. If you ain't willing to work hard, then can it? It's the most sought-after job on this planet. Now, you tell me you wanna be an impartial judge of my solvency. Now, you tell me you wanna protect the world from corporate fraudulency. Now, all that sounds like fun, son, but you gotta walk before you can run. To know what these numbers mean, you gotta know the debit credit theory.
Debits on the left, credits on the right. Debit left, credit right, debit left, credit right. For complete satisfaction, balance all of your transactions. Debits on the left, credits on the right. Debit left, credit right, debit left, credit right. For complete satisfaction, balance all of your transactions. Balance all of your transactions.
If you really wanna know budget cash flow, where your money go, then give in to the temptation. Understand the fundamental accounting equation. An asset increasing is a debit, an asset decreasing is a credit. The reverse is true for liabilities and equity. If you get this, then you get accountancy.
Debits on the left, credits on the right. Debit left, credit right, debit left, credit right. For complete satisfaction, balance all of your transactions. Debits on the left, credits on the right. Debit left, credit right, debit left, credit right. For complete satisfaction, balance all of your transactions.
On a high road, I gotta work your way up to controller. You ain't born a high road, I gotta work your way up to controller. You ain't born a high road, I gotta work your way up to controller. You ain't born a high road, I gotta